Okay, we have to actually start talking about the boring stuff because the boring stuff is actually what saves your wealth. How do you actually buy and build one of these barndominiums? And honestly, it's not as simple as your last home build that you may have built a home in the past, and it's not as easy as just walking to a bank and asking for a traditional loan. Most people enter the barndo world actually with the flipper mentality. They think they can build one for $200,000 and sell it maybe 6 months later for $400,000. But in 2026, the market is actually attacking the quick profit from virtually every single angle. If you are building these for a fast buck, you are entering into a world of pain. So today, we're diving into the cold hard truth of conventional versus unconventional lending, along with portfolio products that no one ever really talks about, and why you will likely have to leave equity in the deal in the short term to capture a fortune in the long term. This is not, and I repeat, is not a motivational speech. This is a financial architecture report. So let's dive in. All right, let's start with Fannie Mae and the Freddie Mac problem. We recently saw conforming loan limits jump to $832,750 for just a single family home. These are the loans that actually get sold on the secondary market. Banks love them. All types of lenders use them because they get the debt off their books rather quickly. But to be conforming, your barndo must act like a stick-built home in the eyes of an underwriter who has virtually never left an office in Philadelphia. So if your structure has dual use, like a massive 3,000 square foot commercial shop attached to a 1,500 square foot living space, you suddenly are considered what's called non-conforming. And the moment you cross the line, you lose access to the lowest interest rates and the low down payments. You are now in the unconventional bucket, which means expensive, and it means higher rates and stricter debt ratios, and a bank that is going to scrutinize every single bolt and product that you used. All right, if the big banks actually turn you down, you need to look for what's referred to as a portfolio lender, usually a smaller regional bank and likely your local credit union. And we want somebody that can actually keep the loan on their own balance sheet. They don't try to sell these loans off to Fannie Mae, and because they hold the risk, they actually make the rules. They are more willing to look at the total utility, and they understand that the value isn't just in a kitchen, it's in the versatility of the steel shell. Right here in my home state of Michigan, we constantly see this with different groups like Farm Credit Services. They understand that a metal building on 10 acres is a productive asset, not just a shelter, but portfolio lending comes with a price. You might be looking at a 5 to 7 year adjustable rate mortgage instead of that 30-year fixed rate that is so sought after. You are virtually trading certainty for the ability to just break ground. All right, here's the pill that's pretty hard to swallow. In the barndo world, cash is not just a preference, it's virtually a requirement for survival. Even with new loan limits, we see a consistent appraisal gap. If your cost to build is $500,000 and the appraiser can only find comps for $400,000, the bank is only going to give you 80% of that $400,000 value. That means you're on the hook for the $100,000 gap plus the 20% down payment. So that's like 180 grand. You are effectively leaving your equity trapped in the dirt. And if you don't have the liquidity to basically weather that gap, you're going to stall at the drywall stage, and you will become just another for sale sign on another unfinished barndominium project. And guys, if you think the barndominium is actually the first asset class to face this uphill battle, look back to the 1970s at the loft movement. In places like New York City and Chicago, for decades, industrial warehouses sat vacant because zoning said they could work there, but they could not sleep there. Banks refused to lend on them because they could not categorize a luxury home that had 15-foot ceilings and exposed brick. The lenders called them factories, and the appraisers called them worthless. But the pioneers who saw the utility bought them for pennies. They weathered the stigma phase and fought for zoning reform. Once the secondary market figured out the appraisals, that asset class exploded. Today, those unfundable factories are the most expensive real estate in the world. The barndominium is the rule loft. We are in the same frontier phase where zoning is lagging, and if you can survive the non-conforming years, you are positioning yourself to own the asset class of the 2030s. So why do it if the math is brutal today? Well, because we are banking on zoning tailwind. Right now, we are in the stigma phase where appraisals are suppressed by outdated data and outdated guidelines. But as reforms like Michigan's House Bill 5581 take effect, the barriers to entry will soon drop. More barndos will be built and more data will be created. The appraisal ceiling will likely shatter. And if you can weather the storm today and leave that 20% equity and that gap in the deal, you're positioning yourself for literally a monster refinance. And that will probably show up in 3 to 5 years down the road once the secondary market fully matures and you can actually pull that cash back out, lock in a long-term, lower conventional rate. But guys, you have to be able to survive that intermission. Let me be blunt. If you plan to build a barndo to sell it in 18 months for just a quick buck, please stay away. The challenges are virtually attacking from every angle. Material costs are ever so volatile. Labor is at an all-time premium, and the buyer pool is still smaller than the traditional home. You're building a niche asset. Niche assets are for wealth preservation and long-term lifestyle, not for speculative flips. The cost to carry the debt on a portfolio loan will likely eat your margins alive. Building a barndominium in 2026 is a sophisticated play. It requires you to understand underwriting as well as understand architecture. You have to be willing to fight the township on zoning, and most importantly, you have to be willing to leave your own money in the project until the rest of the market actually catches up. This is the path of the rural loft revolution. If you want to see my checklist on how to prepare for an appraisal on a barndominium and the insider binder that hopefully forces the bank to say yes, and if you're interested in any of that info, please just send us an email and we'll see you on the next one.